recording. No, we don't even need to know what's happening next. If we want to trade this range, we have a clear we have clear targets, right? Range high, range low. Range lows are usually a little harder to trade in crypto. I think it's simply because people always want to get long. And so if I take a scalp, it's usually on the short side because the market is screaming. Usually then it's like, fuck yes, I want to go down. To me at least. So I have more edge in crypto shorts on the scalp side. And I think there's a very logical reason. As said, everybody wants to go long crypto anyway. So range high, expecting a rejection until proven otherwise. But this doesn't mean that we need to invalidate higher time frame ideas or get nervous, because they're like on a very different scale. If you look at this, I mean, the weekly candle doesn't look that great right now in BTC. I mean, this is like, I would consider this some absorption here, but yeah, if we switch a bit, it doesn't look that bad. And it's, as said many times before, it's just one daily close that closes this candle. So yeah, in general, it is absorption. If I look at all those time frames, we have this wick at the top on many, and we got rejected from there quite hard. And all of this reminds me a lot on this, to be fair. And I talked about this in my video. So if this whole idea is not clear, and we can talk about this fractal as well. And I'm not trading this fractal because it's a fractal. I'm trading this fractal because we are maybe in a very similar stage of the market cycle. And maybe this little exit pump here was already enough to attract enough liquidity to like be an exit pump, even though it looks super small. Sometimes a 10% or even from the lows here, a 30% pump is already enough to attract a lot of liquidity. And maybe that's the case, maybe it's not. We will see. But back to the local structure. Range high being more bearish, range low being more bullish, right? And doesn't mess with the higher time frame idea, but for scalp ideas. Same on ETH, pretty much like similar structure. And one thing is definitely for sure, we having resistance here at this range high while making higher lows here. We could consider this a sign of strength, but the fact that we do not really like get over this upper level here doesn't mean anything. So it's not really telling us, oh yeah, I want to go higher, or no, I want to go lower. We need to find markers to define this in a different way, because this alone, like the local structure, is not telling us anything for a higher time frame ideas. And this is what I see oftentimes with my mentees, and also like looking at X and how people trade. They confuse this lower time frame stuff here. Basically, I mean, it's the daily, but they would consider it for a swinger, they would consider it lower time frame. They confuse this with the higher time frame idea. And anything that happens like here without any decisive direction, going higher or taking those lows, is not like doing anything to this idea. And this is a very, 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 very important distinction. And obviously this all can be traded. In higher time frame, it doesn't move a lot, but in general, these are huge percentage moves. And so for scalpers, this is pretty much heaven, actually. And yeah, so still ranging here. USDC still looking somewhat a bit strong here. I mean, right now we have a big red weekly candle, but in general, it seems to grind up way more than Terror Dominance does. Terror Dominance looks like it wants to top, and USDC it looks like it wants to go higher, actually. What this means for the market, we will see. And considering that we are most likely in a bear market, and the bear market for Tether looks somewhat like this, right? Like going up, Tether dominance, obviously, in the last bear market at least. And we are back at this extreme range high, so we could be here, nuking a bit, pumping again, doing like this super long range. Or we are already here, something like this. You see, sometimes the structure is looking like something, looks like parabola, sideways price action, and not breaking down. It just went higher, and it went higher significantly here from 6% to 8%, 8.6. This is a huge move. And this was pretty much the last, like in June 2022, brings us back to this idea that we may be in those big legs down in the bear market, June 2022, and you see what happened. Like this was pretty much the last big drop. Then we spent lots of time during the summer doing pretty much nothing. And then in the winter, once people started being glued at the screens again, we had this last big drop, which was then the last capitulation pretty much. I don't say this will play out exactly like this, and we have a clean validation. If we start going higher from here, I mean, then the idea is clearly invalidated. But if you do not, once this leg down is finished, and let's say we do something similar, which is like 46% from here, the higher time frame buy zone is reached, right? So, I mean, we might go a bit lower from here. We have this final capitulation, whatever. But I would not bet that this must or need to happen. So once we get another leg down, higher time frame buy mode is on for me because we are at extreme range lows then. But taking it level by level, right now we are still in this range, and until proven otherwise, this is the range. And same for Tether. So this is just speculation what I'm doing. I'm just looking at historic PA to draw some conclusions for the future. And I think this is a very powerful way to understand the market. And not because like they just simply play the same agenda again, because this is not what happens, but people's behavior does not change a lot. I mean, people learn, but in general, most people that are not really like intentional with becoming traders, they will gonna do the same mistakes again. And the 2022 bear market played out so nicely. Why not repeating the price action in a certain way? The only big difference is that I remember in 2022, and I have the data for it as well on my charts, crypto was bombarded with negative news. Like everything was pretty much going to shit for crypto, right? We had Luna, we had Celsius, we had 3 Euro Capital. This is all what happened pretty much from now on, right? Luna should happen within, or let me check, let me fact check this first. It's not this chart, it's never this chart actually. So, oh yeah, here we go. That's not everything. Ah, yeah, no, I did not put it into the group. Ah, here we go. So we had like record interest rates. We had the Russia invasion pretty much. And then we had before this little range occurred, like the range I was pointing out before. Now it looks a bit more messy. We had the Terra Luna collapse. We had a Tether stablecoin panic. The what's the word? A slightly a DPAC. We had US-China tensions, North Korea missile tests. So we have a lot of real world fear already, but we really have no like crypto-related fear. I don't know. I haven't checked today, but the last days it was never like really like, okay, crypto is going bust. It feels like it's still like the bullish agenda is still running. Government, everybody's supporting crypto right now. And yeah, so this is what I would do as market maker if I would want to pull the plug at some point. And yeah, so we will see, taking it level by level. Should we break this down? We have a logical target down here. For this, we are long. Should this go higher? For this, we are short, best case. And that's pretty much it. And looking at USDC, I don't know if we can draw a lot of conclusions from USDC back in the day, simply because it was like super small, like it pretty much launched 2021, and it gained traction into the pump almost a bit. But then 2022, with something like this, yeah, probably not so easy to draw conclusions from that. But look at this, actually, May 2022 into June 2022, right? It's pretty much this, isn't it? Like spike to the upside, grind, pump suddenly from there. And we have a spike to the upside, grind, and let's see if there is a pump or not. But the possibility that there is a pump coming and we see a 70% increase here, it's not that unlikely in my view. And this would then align again with bear market targets and scaling into big longs. This is actually like, because we talked about Hello, Chris. Just let me sip from my tea. Hey, Stefan, by the way. So, side quest. Yeah, interactive brokers. Four times two. You can trade it in SAR, which is the currency, and you can easily convert everything in blah. Yeah, and you need to request access, obviously, which takes a few hours, but you just request it and it happens. Fractal topic, yeah. Let's dive into this a bit more because we talked about I said I want to put my whole strategy a little more into a framework. But you see, like my whole thought process, what I explained right now, this is pretty much what goes into every decision I take. If it's not a purely structural trade, usually then it's a scalp for me, but rather like a higher time frame idea. All of this always goes into my decision making. That's why it's so hard to say, okay, you do this, step 1, step 2, step 3, and then you got your result. It's always like a very complex combination of many different layers. That's why I always like to explain my thoughts, because it's easier to show people on the chart and to explain my thoughts in real time live than to prepare something. I mean, I obviously can like the PDFs I done and the basic things like supply and demand, premium discount. I mean, this is all like on paper, right? You see it in front of you, but the rest is pretty much knowledge and perception, how I perceive the market, how I perceive humans and their behavior. And this, all of this I put into context. And as said, it's pretty hard to make a framework for that. And best case, you build your own like knowledge and understanding of that. And in the in the end, I can. The funniest thing is that I can explain like why I do this and that for like an hour or two, and in the end, I can just break it down to we either go up from here, we go down, and we go sideways. That's pretty much how the market works, right? We have only those three options. So what can we really do? We can try to prepare for all of those three. I mean, if it goes sideways, I can either like trade the range if I want to, or I'm simply patient and wait for something to develop, which is for me, for my big positions right now, the case. And then I have two other options. It could go up, it could go down. And what's the best thing I can do? I can prepare for both more or less. And I already, if I take a long, I already prepare for downside by simply setting a stop loss, right? This is pretty much my first preparation for more downside. I do this for every position. Same way, if I take a short, I prepare for upside by setting up a stop loss and invalidation. But if I want to make it even more efficient, I start hedging my positions. And as we know, premium discount knowledge, maybe not on the USDC chart, maybe on a cleaner. Premium and discount knowledge, we are at extreme premium, so it makes sense to look for longs. But up here, it made sense to be on the sell side. I didn't short ETH actually, but I shorted BTC up here. And this is extreme premium, so it's more likely that we go down from here. This is like the same thing with the range knowledge, right? Once we hit the range high, it's wise to expect downside. It's simply like it shifts probabilities more to the downside because a breakout is usually less likely at the range high, and if it occurs, you have a clear invalidation. So easy in this case. Then you take, for example, a short up here. Let's make it like on this example. You take a short up here, which is automatically then hedging your long. If you took a long down here, this short is already standing against it. So it already protects you from a potential risk of paying, or a part, or depending on the size, the full size of this trade is already protected then. And from this point on, you took the long down here, you took the short up here, your bias is gone. Because you look at a long and you look at a short and it's like, I don't care. It doesn't really matter what happens, because either way, one position will pay the other. And best case, you reject a bit, you take a profit from your short and you remove the risk. You put your stop loss to break even. Even better, because then you are still long, because it's more likely, it's better to be long after such a pullback. And at the same time, you're protected a bit and remove the risk. So you counter this position. This is, for example, how I took those scalp shorts at the top. all countering my big longs from down there. And as I said, this is pretty much it. But obviously, we wanna add some layers of shifting probabilities, because if it's only that, I mean, then yeah, this is usually not enough. That's why then all this, like looking at the past, looking at human behavior comes into play, because as I said, things repeat. Some things just repeat because human behavior does not change completely. We have same patterns playing out, not exactly the same, but humans don't learn that fast, especially like the majority. As I said, they don't take trading serious. They will just fall for each and every trap, and if they are like gone, there will be a new wave of players. So all those that got completely wrecked in 2022 and never touched the market again, they're all replaced now by all those people. Like the government is buying PTC kind of hype people, and they are like now in big drawdowns and hoping. So in the end, we have a similar situation now, maybe with different people or even with the same people. And those people, they have the same emotions, they have the same behaviors and everything. And so it makes sense to have a look into the past. And if I look at a fractal, if I look at this, or if I look at, for example, the BTC fractal from here, what I see is not, I mean, I see the price action obviously, but I don't see the price action and say, yeah, we have to form all those candles exactly like we did before, because this is the most efficient way. No, I see buying and selling. If I look at this, I see people getting liquidated here. I see people chasing this move here. I see people being frustrated and bored here, taking too high leverage, getting stopped on this wick. Then we take the highs again. People get super bullish on this one daily 10% pump. This is what I see if I look at this price action. And this is why I compare it to right now, because we are at a similar stage of the cycle. We have trapped a similar type of player most likely. And look at this. We have this bounce, liquidating people, making people chase, 20% pump, boring people out, stopping people here, and then taking the high, doing a 7, yeah, to the wick high, 7 to 10% pump in a single day. Same story here. Making people, 6% actually only, making people super bullish in a higher time frame downtrend. And as I said, this is what I see if I look at this. This is, to me, not I copy this fractal and say it needs to play out exactly like that. And what I also like to do is to measure the time. So how long did this, for example, take to play out from this liquidation candle here to once we started breaking down again, it's like 30 days. And from here or here, doesn't really matter, 30 days, we're already over that more or less. But this is not like, oh no, we broke the 30 days, now it's invalidated. No, it's like a general time frame of, okay, so long, it took so long to make like this happen back in 2022 to make people chase this move and to like pretty much buy the exit pump. So if this is in play, they will probably take as long as 30 days, maybe a little longer, to make this play again, for a simple reason that people need time. So to buy and to sell, people need time. They need to have time to react, to be emotional, to do the wrong things. You can't just do everything and compress it in 5 days. It's just not how it works. And so this is why timing in this for these fractals makes perfect sense. And then again, in the end, I can predict, I can talk, I can do whatever I want. Everything sounds super smart, but in the end, I can break it down to we go up, we go down, or we go sideways. And what will I do to prepare myself for those 3 outcomes? This is pretty much it, in my view. I don't know why that is. I actually don't use a lot of CFDs. I use mainly like their margin account, and I buy those stocks just like spot, more or less, physical stocks. Which is then, because it shows me like my stop loss, and the CFDs do not. If I set up an order, I don't see how much my stop loss will be. And just for this reason, I actually picked those physical stocks over the CFDs. They have some limitations. So the reasoning is, I don't know like it depends probably on the country. So they have like lots of different regulations for different countries, obviously, depending like on the laws. Then you have those quizzes. If you fuck the quizzes up more or less, it can imagine they block you because they say, okay, maybe there is like not the right knowledge is within you to be able to handle those things. So, but usually you can do those quizzes again. It's not like they block you forever, at least as far as I know. Plus, I know they have some kind of they want to see, for example, if you want to be a day trader with this account, I think you have to have at least like 25K in the account and stuff like that. And also for applying for the margin account, they have something you have to at least have on their account. But I don't know the numbers actually for sure. I just remember when I opened the account, I just put in a small amount, played around, tried around, and scalped a bit. And then after 3 trades, it told me you can't. You need to put in more money. And then I started to like Interactive Brokers, and I like moved most of my TradFi funds there. And suddenly I could like unlock a lot of things just like that. So might also be the reason, but I think GBT will help a lot there. Yeah, and as I said, those quizzes. If you want to unlock something that's dangerous, if something with leverage or whatever, you have to answer those quizzes. And I applied for complex ETFs, or what is it called? It's called complex ETFs. It's like leveraged ETFs, pretty much. And the quiz was actually kind of hard, and it was things that I did not think about before. And I failed it once, so I had to do it again. But then I unlocked it. So as said, usually they don't block you for life. Yeah, how I'm going to prepare? Yeah, I mean, pretty much like as said, you prepare for every trade you prepare already because you build an invalidation. Like, where is your stop loss? This is pretty much your first counter idea. There is no trade without invalidation. So you set up your idea, you have an invalidation. This is pretty much the first, okay, I bet on the prices going up, but I'm prepared for it's not going up, which is then my stop loss. So you already prepared in this regard if you simply set up your stop loss. And for different events as a so in general, you should start thinking that way. Like I'm trying to explain right now, like the hedging thing and building like a portfolio of higher time frame positions that balance each other out. So this is pretty much what you should aim for, because what I see people do is usually they take one trade after the other, and if I then tell them build a strategy that includes hedging and all that, make sure to really like combine all those positions, right? And people usually tell me if I tell him that they're like, no, I'm not that far. I need to trade each trade on its own, and this is one trade, and I win it or lose it. Yeah, that's nice. I mean, okay, if you want to play like that, sure. But I say it's way more effective, and it's so comforting for the mental game if you have higher time frame positions that balance each other out. So for example, you have a Bitcoin short, you take some altcoin longs. There is no pressure, no nothing, because you know if your idea fails, you maybe pay the stop loss, which is your first preparation, right? And then the short covers the stop. And so what's the issue here? I mean, nobody likes to be wrong, right? So the stop loss might still hurt. And obviously we should still not take stupid ideas, but really well informed trades. But in the end, nothing can hurt you anymore. And people, they are like often so stubborn. They want to do this thing because they want to learn trading first and then apply hedging. I say to learn trading, it's much more easier to apply hedging from the beginning already. And then you also, the funny thing is, if you start doing that, especially focusing more on higher time frame plays, I mean, from our perspective, for a scalper, this would already probably be painful to look at the fluctuating P&L for a I mean, this trade was at 22 hour. I mean, it's now at 19 hour, so let's say it's at 20 hour. For most traders couldn't handle that. I tell you that, especially scalpers are usually very like nervous. They need to like lock in the gains. Can't see the fluctuating P&L. And for me, this doesn't bother me at all. For me, this is like super comforting because I know I can build some huge shorts, and if we go further down, yeah, this will pay me even more if it goes up. If you like really form some high highs here, I can still TP here for then only 18 hour. Ooh, poor me. Um, you know what I mean? So this is something that this is like the core part of my strategy pretty much, and this is like up, down, sideways is exactly handled with all that, because I'm short here, I'm long ETH. Same in the stock market, right? I have those big shorts, and that's why I open, for example, I open PayPal because it's in the level, and technically it's a tech stock which should, like in theory, hedge those shorts. It's not always the case. Sometimes weird things happen, irrational things, I would say. But at the same time, I'm also long here. So you see again, I don't know what happens next. I have a base case based on all information I, for example, shared with you before, like the macro stuff, psychological stuff, mass behavior, and obviously also technical stuff. That's why I took those big shorts. But I also have technical reasons to go long here. And for somebody who is not able to bring this together, it's maybe even an uncomfortable situation because it feels like, oh, I have two opposing ideas and I don't know how to handle them. And I'm not sure, should I do this, should I do that? Why? This can't be, and whatever. And for me, it's just like, ah, yeah, I get my technical signal here. This is even nice. I'm happy that I got the signal because then I can hatch this idea. But if I would not get the signal, I would also be happy because this would probably mean all of this would went down. So would have gone even further down, which then probably also means that my short here would print more. So you see, in the end, nothing can hurt me. It's all pretty much part of the plan. Why? Because I prepare for upside, I prepare for downside, and I prepare for sideways. And the best thing to prepare for sideways is pretty much by just being patient. Because you see how long I'm in this first trade here. I started entering somewhere in this neighborhood, and this is what, like, January. It's March already. So I'm sitting quite a while in this one. And it went into profit, it went into negative, it went into profit, negative, profit, negative. Doesn't really matter to me. I can do something else in the meantime. I can trade ranges. I can like trade crypto, single stocks, whatever. But this idea is not invalidated until it's invalidated. And you see, up, down, sideways. It's those three things: upside, sideways, and now downside. So in the end, prepare for everything. Yeah. Also something like having different exchanges for different ideas. So I have also like Kraken for my long-term place because it offers USDC and I trust USDC a bit more right now. And so I built my long-term longs there. The shorter terms I have still on BitGet. I don't use Maxi personally anymore because there were some concerning things happening late last year, but I mean, doesn't mean it needs to like break down immediately. But I think some exchanges will fail like in every bear market, so be careful with that. And yeah, I also had always different accounts between my scalping. I had a different account for different reasons, and it's still like that. I do like when I do short-term stuff, I do it all on BitGet actually because I like the interface a bit more than Kraken. But yeah, in the end, it's super nice if once you realize crypto is usually moving like synchron. It's not like that you want to catch 5-6 longs on 5-6 different coins, but you realize, okay, I can play them all a bit different. I can go long this coin, I can go short this coin, depending on what the market is telling me. And yeah, it's just a lot more fun. And a lot better, a much better place to be in mentally. But yeah, guys, this is something really internalize this stuff. Up, down, sideways, build a case for each. And you do that simply, I mean, people don't realize it because oftentimes they just follow a rigid step-by-step kind of thing. Like, I see a level there, I place my position here, I put my stop loss there, but they don't really realize what they are doing there. It's like, why are you taking this trade? Yeah, there is a breaker block. Yeah, sure, but what is this block telling you? Why are you going long? Why are you going short here? So I mean, if you like purely play a statistical edge and you remove yourself from the equation like completely, you can simply then like do this mechanical system. But it still helps a lot to understand what you're doing. Like maybe not, you don't need to understand why a breaker block is what a breaker block is and how it's formed and all that for this kind of system, but you should still understand why you put your entry here and your stop loss there. And the stop loss is pretty much already you building a case for you being wrong. And people don't realize that. And the stop loss is there to protect you from being wrong. People fear a stop loss, but in the end, it's like, it's pretty much your friend, right? And it's your counter thesis for you being wrong. And once you figure that out, every position you take starts to become part of this little puzzle. Like, okay, I build a thesis here. I'm like bearish the market. Okay, I'm right on this idea. So the position goes into profits. But at some point, I know the market will bounce. It will not go down forever. So what do? Do I take profits from my short? Or do I take maybe a long and keep this short? And this is exactly what I did on BTC at some chart here. Because I could simply say, okay, I TP 50% of this short here. It would pay me a lot of money and I could say, okay, I'm happy with that. But I mean, we are still at 70K. And usually once BTC goes into a bear market, it's not done with a correction like this. It usually gets a lot more bloody. And so I decided to take some profits from here, which I can easily use to reallocate into longs, which also means I do not increase my exposure to exchanges because I simply take the same money or I take my profits and reallocate them in a new position. So I don't have to fund these accounts with like, deposits like I would do for an investment account. I don't do that with crypto actually. And then I decided, okay, I can TP here 50%, 60%, whatever, or I take the 30%, reallocate them into longs, which is also a form of buying, right? And I bought so I did it not on BTC, which makes it a bit more complicated. But I could have also said I do this. But look at this wide stop loss and everything. That's the reason why I did not do it on BTC. But let's imagine I would have done that. Then this means I risk, for example, those full 30%, or yeah, how should I frame this? So my short position is up currently at 20R and I took it on 2 or 2.5% risk or something. So anyway, this position is up 20% right now, unrealized profits after the TPs. So if I now take a long here, for example, in ETH, which is 2% or something, or is it 3? I have to check. Then this position will cost me, like for example, if I take 3% here, 3%. So in the meanwhile, this will then be here which is probably then my position will be up 25%. So from those 25%, I pay a 3% stop loss. So my short is then technically up only 22%. But I'm still in the short. So should we go down further because we lose this level, the position will then be up 35, 40%, whatever. And I won't even think about this 3% stop loss anymore. You see what I mean? And this is like why it's so easy for once you're playing the game, not just one trade after the other, but seeing the whole thing, building a system for all your positions, like everything is connected to each other. Your whole account, everything, all of your accounts are connected to each other. Because even me being short here and paying some of my stock gains back because I was long on many of those, and sometimes it took me a while to realize it's breaking down, and then I paid from the all-time high of my portfolio, I paid a good amount back, which looks ugly on paper, but I mean, yeah, I mean, after a 70% rip of my portfolio, paying a good chunk of it back, like it's very unlikely that I sell the perfect top on all my positions, and some of them are long term. But at the same time, I took the BTC short, which then balanced all of those unrealized paybacks more or less out. And again, it has nothing to do with each other. My crypto account has nothing to do with my TradFi account, but it's still connected. It's all like one play. And I like to see trading as, for example, chess. Let's take chess for this example. You could also argue it's poker or whatever, like a strategic game. Let's take chess, where you play one move after the other, but in the end, all your moves are connected, right? So you don't just move some figure somewhere and say, yeah, fuck it, this figure does this figure does this. You build one strategy. If you want to win or if you play good, you build a big strategy with all your positions. And everything is connected. You might sacrifice this position, this figure, like you have like this, what is it called, pawn in English, I guess. You sacrifice this pawn or even officer to make something bigger, to win the whole game, not just this one move, right? And this is exactly how you should treat trading in my view. This is at least how I perceive the whole thing, because I make one move and it all serves a bigger purpose. So this is my main goal. My main goal is to run up my portfolio, right? My accounts to make money. So I sometimes sacrifice some unrealized gains on the short, should it go higher, to be hedged in this case. So you could call it, I sacrifice a pawn here to maybe make a bigger move with my officers. So, and this is exactly how, in my view, good traders, especially swing traders, play the game. It's all connected to each other, and it's not, for me, it's not a technical, not only a technical game. I think technical analysis makes 40 to 50%, and the rest is mental game and strategy. And maybe the technical part is, yeah, like let's say 40%, and the rest is split up between mental game and strategy. And those three cornerstones, they all work together. They all work into each other and help each other, balance each other out. And you have probably one which is good, you have one which is really bad, and you have one this is probably considered average, depending on your personality type. And you need to figure out what you're good at and what you're not good at, and obviously work on your C game and improve your A game. And in the end, build one big strategy to win the game, not the move, not the single move, but the whole game. And this is how I perceive the market. And somebody else would probably say, it's not like that for me. For me, it's like statistical game, mechanical game. I make one move after the other. It's not like chess. It's more like a card game where you just like, yeah. Okay, now I I stopped with my metaphors, but you get the point, right? In the end, strategy, and you need to figure out what works for you, because this is like my mind. This is how I perceive trading, how I handle my portfolios, my account, my whole strategy. For you, it might be completely different depending on how you perceive the world. And this is always what I wanna point out, that what works for me really good might work not so good for you. You can try to copy it, but in the end, to become a really successful trader and really good in what you are, over the long run, you will build your own system. It will maybe have some parts of me, maybe have some parts of somebody else who you learn from, but in the end, it will be your own unique strategy. This is what in my view, makes a good trader. Yeah, and this is what this all is focused on. And yeah, I hope I really get like I really can make people realize what I mean. What's the word? Can't figure the word. Yeah, that I can really teach that what I mean. Because as said, for me as a very intuitive trader, it's hard to put it into a framework. I can't really put my whole strategy into a step-by-step guidance thing, like where I say you just take step one and then you take step two and step three is that you win. To me, it doesn't work that way. But I always share all my thoughts, and if you really like pay attention and do those things I, for example, say, like study historic patterns, take notes of those news, take notes of behavior, take notes of like everyone around you, how is the market affecting everyone around you. It's not just like those people you met in the internet that are also trying to get to become traders. It's also the people in the real world. How are they affected by market, by rising prices, by the oil price? How are people affected in different countries? I made this post, for example. I met this Finnish guy yesterday and this Polish guy, and later I phoned with my dad, and my dad said like only Germany and Austria are so stupid, and they let them play and the fuel prices because of this is and that is so high and blah. But in the end, the Polish guy said the same, the Finnish guy said the same. Everybody says the same. If you talk to people around the globe, all people like really like wake up to this. It's not a secret anymore. But the thing is, what can we do about it? We all know that the system is rigged. We all know that it's not fair, but it doesn't really change anything. It's like the question of, is there a God or not? The question really is like, is it affecting me or not? What is it changing? Like, yeah, there might be a God. And I think like belief is important, and it helps me in certain areas of life to have some kind of belief. But I will never find an answer to like, is there a God or not? And it's the same thing with the market. We 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 can argue hours about what will happen, what has happened, and all that. And I think it's important to understand those things. But in the end, what is really affecting me and what is really like changing my behavior? And these are the most important things. And I like to be super efficient. And if it's not leading to better results, I usually completely rule it out, because sometimes, for example, some things just doesn't that just doesn't lead me to anything. They might sound smart, it might be interesting to think about, to talk about, but it's not like efficient to include it into a trading strategy, for example. But yeah. Yeah, I'm also pretty happy with Kraken, actually. The user interface is quite a bit different, but overall it's super stable. And also it's also nice to get used to a new interface, because for example, if you just know how to use one and there's a hectic situation, the exchange goes bust, whatever, you want to move your funds and then you want to open another position because it's a great time to do so. It's good to have like different options and to like not just being step one, I open the app, step two, it looks like it always looks, but now in this case, okay, maybe I need to adapt, I need to know the words, what is margin, how to adjust leverage if it looks different and all that. So it makes sense to be educated about different user interfaces in my view. Yeah, and I think many people, this again comes down to what I said earlier in earlier sessions. People are at different levels, right? You have absolute beginners, you have intermediates, you have people who are like experts or advanced intermediates, whatever, and they all need something different. And for somebody starting out, as I said, most of the time people just want something they can hold on to. It's just step one, step two, step three. They don't want to be overwhelmed. They don't want to build something themselves. They just want to do it. And it's probably also very good to just have that for the beginning. But then over the long run, and I see this whole mentorship here not as like for complete beginners, and I don't think you are, it's important to like go away, like you said, from the mechanical thing where you don't really understand what you're doing. If you want to be good in something, it can't be that like that. It's not like building an IKEA furniture. It's the same thing. If you want to be a carpenter, you can build IKEA furniture from the beginning, like with the manual. But if you want to build them yourselves, obviously the manual and step by step won't teach you a lot, actually. It's just like putting things together somebody else came up with. And it will never feel as natural, and it will never flow as natural as if you have built everything yourself, because you understand each and every step in the production. Same with the trading strategy. Yeah, perfectionist. Being a perfectionist, as I said, it has positive sides, it has negative sides. But I figured that I've seen more perfectionists struggling than people that are not perfectionists in the market now. Talking about the market, it depends so much on the profession, I think, because I actually had a conversation today with an engineer, and he said also he struggles with trading because being an engineer, and especially like being an engineer that studied, because uh, I know from a friend that is like a car mechanic, which could be considered some kind of engineer. Nothing is like certain. You have also pretty much probabilities of the guy who assembled the car before you and disassembled it and maybe did not put everything back. But what I want to say is he's like a studied engineer, and for him it's like everything, if he plans something out, it's perfect. Everything needs to make sense. Everything needs to make like every gear has its place. And in the market, it's very hard to find that. And why? Simply because the market is an emotional place. And people with a rational mind, they come to the market and think like everything is logic, everything is rational. That's why crypto works so well, draining people's money, because because people think it's a rational place to be. No, it's not. Look at what happened. Look at meme coins. Look at fucking Fartcoin and stuff. This is not rational, and it's intentional. It's to catch those people off guard, to catch rational thinkers off guard. And the market is so effective in that. And that's why in the markets, I think perfectionism is is not a super helpful trait. In some areas it might be. And as I pick the good things, make them stronger, and try to make the bad things of it as small as possible by just like executing, even though it's not perfect, just executing all the time. And you will see it will get better, simply because I also think the personality is something fluid. It's not static. I mean, we change over our life many times, and I think even probably day by day. If I think about who I was last week, it's somebody else than I'm right now, simply because I made new experiences. I learned something and validated some core beliefs of, no, maybe not core beliefs, but beliefs of mine. And so everything is constant change, and the market is as well. Yeah, and exactly what you said, like against your will, just doing it. And the funny thing is, so many things in life, if we want to be someone who we are not and achieve things that we can't pretty, or that we never have, we need to do things we have never done. And for example, if you face a problem, if the market is beating you up, if it's hard, whatever, why not trying it differently? And over time, as said, also the personality will adapt, because I'm not the same trader. When I started, I was not the same person, not the same personality, not the same trader that I'm right now. And this also came from doing things against my will. And I'm still sometimes, or in many cases, I do that. Like cold showers I take after being all day out in the mountains. I do the cold showers to regenerate my muscles better. It's still not pleasant. It's still not nice, but I know it helps. And so I just do it, and it helps. Exactly. This is also a good point. If you and in general, this is also what I meant today in this post. Like live your life, not, and also like look at the whole agenda. It's like nowadays in the whole, like this decade, if you watch something from this decade, and especially if it's from Netflix, you get the feeling like you have to make a lot of money to really be free. And I mean, yeah, money helps, but I've also seen so many people having pretty much nothing, or only living with a minimum, and doing a job here and there and working something like being a scuba diver, whatever like is fun to them. And they live such a great life. They travel the world, they do this, they do that. Of course, they don't have a big house, they don't have a pool, they don't have a big car, whatever. But they are much happier than a lot of people I've seen which have all that. And so who's doing it right, who's doing it wrong, doesn't really matter. The only question is what is right for you. And again, in the trading world, it's the same. If you try to force yourself to do something that you're not, it's not going to be fun. It's not going to be pleasant. And then the question is, then you could also do a fucking day job you hate, right? What's the point then? And it all comes down to doing the things that you're meant to do, more or less. To be honest, I take a lot of decisions about my life based on intuition. It's like I've trained my intuition, but I also trust my intuition because sometimes I cannot know what happens. Obviously, I try to make a rational decision in my life. So, for example, where I should go next, what I should do next, what I should focus on. And obviously, I do that. But in the end, oftentimes it comes down to, I don't want to say gut feeling because, because gut feeling sounds a bit like a bit loose, let's say. But in the end, I trust my intuition because my intuition, in my view, my intuition is my subconsciousness fed with everything I've seen and done and learned in my life and trying to tell me something. And if it's trained and if it's like, if you know how your intuition works, it's in my view one of the most powerful things. And this is also, for example, how I go with trading, because I know I've put in so many hours by now. I'm not tricked by the market anymore. Not like getting wrecked, completely being tricked. And even though I'm wrong sometimes, I just have a stop loss. So who cares? Like, what the fuck? I pay 1, 2, 3%, whatever. And I said, and most of the time I have a hedge for that anyway. So who the fuck cares? And so a lot of positions I open with also like my intuition, because I look at the chart and I let my subconsciousness tell me what it sees there. And in the beginning, obviously, this doesn't work because the subconsciousness, also mine, was programmed for losing, because it was fed by negative beliefs, negative statements, and also false information. If you come to the market, you get fed all this fundamental shit, especially about crypto. And then you think like, oh yeah, this makes sense. This is rational. It's like, it's a super nice project. They have contracts with this and that company and blah, and all makes sense. And even your intuition tells you, yeah, that's right. Because this is what you learn in your life. Take the rational decision, a good business decision, but the crypto market is exactly the opposite, pretty much. And on purpose, obviously. But yet still, once you have learned the structure, once you have learned charts and all that, the intuition can be trusted again. And I think it's a super powerful tool if you're able to use it properly. And then the system and strategy will develop based on that, because you have then all information, you tried different strategies, you made lots of experiences, lots of input, and it takes some time, but in the end, the subconsciousness will build something out of that. And it's going to be the best thing for you because it's from you. And if you program yourself for success and integrate all those things into your subconsciousness, in the end, this will be your strategy. And it will be the best and the most flowing strategy. Live and breathe, exactly. Something that is yours. And I always, as I said, I compare this always to all areas of life, but because for me it's all the same. Like if I want to be good in something, for me it's also like skiing is a big one. It's the same story. I need to do what flows. I need to do the lines that feel right. I need to find my own groove. I can learn from somebody else how to do this turn, but if I'm on the slope, all the theory doesn't help if it feels shit. And so I have to do it like it feels right to me. And yeah, for me, it's in all areas of life, it's like that. 240, yeah. I remember 240 was probably the last time was in COVID. By the way, Chris, I mean, you don't have liters. I think you measure in gallons, right? How much is 1 gallon? Maybe I check that. What is the price right now? How do you measure that? because 240 I remember was in COVID the last time, and I said I'm still I'm still below €1 here. It's crazy, and yeah, because you said that right now, it's still it's the supplier contract. I checked it. I researched a little bit, and it's first of all because Georgia is not yeah, has not sanctioned Russia, and they have super good supplier contracts. They also don't tax the shit so high because in Europe it's like 50%. Yeah, 50% of the price is tax. Um, and so yeah, in the end, pretty much Europe is losing all of this right now simply because they can't produce oil. They pretty much produce nothing like for the for those resources. Europe is pretty small. I mean, I think in Scandinavia they have some oil production and everything, but it's never enough like for whole Europe. Europe has many people, and I said they fuck it up with all those big countries. And obviously, yeah, you don't want to support Russia. Russia is ass. I don't want to argue against that, but if you're dependent on some resources from somebody, and I mean in the end a lots of Europe's oil is probably coming from Russia anyway because it's one of the biggest producers, and this country buys it from Russia and then that and this contract and blah, and in the end it probably also goes to Europe then. um, and as I said, if you're dependent on something, you can't just say, oh, yeah, fuck you, I don't buy it anymore, I just buy from somebody else, because all the people will suffer. I mean, like, these prices are nuts. It's And Europe is losing it. And I mean, not Europe itself, but the people. And the people suffer so much. First, the gas prices, now it's fuel again, and it was fuel before. As I said, what are the politicians for if not like for the people? And in the end, all those sanctions and climate things and all that, it's all offloaded onto the everyday person. And yeah, it's hurting the people a lot. Hello, Mark, by the way. 3.8 liters. Oh yeah, thanks, Chris. Yeah, and then it's actually a similar price than here. Yeah, and why? Because I mean the US is producing its own oil. Obviously, they don't let their own people suffer. They can produce their own oil, and I mean Texas is even an oil producer, I guess. So you're pretty much at the beginning of the whole chain, and Europe is pretty much at the end, but they fuck it all up with contracts and sanctions and everything. As said, I don't want to support Russia either. I don't buy no Russian products here, but my house uses gas, which comes from Russia, and I guess a lot of the fuel comes from Russia as well. So what choice do I have? Should I drive to Europe to fuel my car and back? So I mean, I can't. But in the end, it's so funny because Georgia is a super interesting country, because I mean they try to be independent from Russia, but it's hard obviously if you're like at the at the ass of Russia, pretty much. Um, they also try to make friends with Europe and everything, and people here are oftentimes very like not happy about the situation, but they actually often have a lot more than people in Europe, in my view, because if you live in a city in a one-room apartment for €1,000, not having a garden, having like 15 neighbors, and that's even probably the cold price by now, not even like heater and everything. Compared to here, everybody pretty much owns a house because like land is super cheap. Fuel costs below $1, €1. Um, gas in winter here is for free actually. The criminal rate is way lower than in Germany, for example. I think Germany is way higher. I don't want to say any numbers. I don't know it. And if you look at the news, Georgia is considered a dangerous country from Europe's view. You have like this revolution, or I don't want to call it revolution. Like, what is it called? Protests. Um, and this Russia friendly government. Yeah, but obviously, if you if you don't produce oil and everything, you are neighbor of Russia, you don't fuck it up with Russia. Obviously, you're a little more friendly than Europe, which get backed by the US and the military. So it's always a balance act, right? And Georgia is considered an unstable country, but as I said, people all have houses, prices are lower. You have very low taxes. I mean, capital gains is zero, and for a normal Georgian person, it's like 12% or something. And it's considered an unsafe, unstable country, but in reality, it's the way of living is much better, and I mean, like way better. And Yeah, obviously I would not want to like live in Iran or in the Middle East right now, obviously. And I mean, I avoid war at any cost, definitely. But in general, oftentimes those countries that are like a little more unstable, where you also like have to take care of yourself a little more, where it's not all systemic. Like if you can't even have no endurance in Germany, which is good. Obviously, endurance helps a lot of people, but it's all super regulated. But at the same time, everything is super expensive, and just the cage is just golden. And I think here it's way easier to get out of the cage and to do whatever you want and to have all those freedoms. So pretty much those freedoms my parents tell me about if they talk about Germany and Europe in the 70s and 80s. They said it was great and everything was good. The prices were normal, everything was super good. But nowadays, you pretty much everybody's is done with it, and people most of the time just stay because of family or comfort or fear. But nobody's really like happy anymore. Yeah, that's a fair price actually. $8 a gallon. Yeah, and it also it all depends where you live and how close you are at the source, I guess. Um, and how good your contracts are, and also how rich the people are. But because I guess they can't just take it in California. I mean, they will have their reasons why it's so much more expensive. But yeah, oh, the next cat wants in. Give me a second. Okay. Yeah, environmentalism. Yeah, same in Europe. It's like it's like a big chunk of the tax by now, keeping prices high so people drive less car. But in reality, if you have to use your car because you live on the countryside and have to go to your job, it doesn't lead to less driving. It just leads to higher prices and to higher costs each month, which is yeah, super stupid actually. Yeah, and if you can, obviously doing everything by bike and stuff, um, as much as possible is super good. And also like for the environment. I mean, I'm not a huge fan of all this of this whole agenda. But I mean, I see a point where you say, okay, good, if billions of people start burning something they dig out of the earth and it's making like dark smoke, it can't be that good, like long term speaking. But I mean, we have no better solutions for now, so why make people suffer? And it's all a bit stupid overall. Yeah, sure. Let's have a look. They're all going up right now, which is, for example, why TLT is going down. But what is your question? Like, I mean, I can explain the structure and stuff, but um, in general, like, it's super slow moving. And the biggest thing is that we broke out of this downtrend here. We met the first higher high since, like, if you look at the 10-year, since a very long time, since the 1980s. And so something is changing, something systemic is changing. But what's your question? I mean, In general, yes, if bonds are rising, it gets more attractive for investors to just buy bonds instead of like stocks. Stocks have a risk, a higher risk than bonds, because if you buy long-term bonds from like stable governments, they have pretty much a very a pretty super low failure rate, and you get paid dividends then each month. If this is also net positive, this is like important. If inflation is higher than that, so if you, for example, have a 10% inflation and you get a like 4% return or 5%, yeah, the whole calculation also doesn't really fit. So all of this is important, right? The risk appetite of people, how high is inflation, how high are bonds, and how is the stock market valuated. And just like without overcomplicating things, because this is like not my specialty, but looking at the stock market, we can't even stay at the monthly, I guess. I would say they're somewhat high valued right now. I mean, we can even look here, but you will probably have seen this chart. I would say they're like pretty high valuated right now, and this is not a sustainable move long term, and money will flow into something else, and bonds could be a very attractive way to invest in the not so distant future, simply because they started making a high, and we might roll over here, we might go down, fill some of those inefficiencies, if you can even measure it like that. I think the bond market is moving completely different than what we usually use as PA. But if this is like, if this even just stays high and inflation stays at 2% or even lower, maybe for a brief period, you get a 3-4% return on your bonds, which is super good if you have a lot of money. If this is even rising, then you get an even better return. So why would a super rich buy stocks? And if you then also take into account that everybody and their dog is now looking at the US stock market and in the stock market and crypto in general, investment knowledge is pretty much everywhere. Everybody's like, yeah, you need to invest, you need to buy this, you need to buy that, you ETF, index fund, you just like passive investing, all that. Everybody knows about that. So the edge is pretty much gone, in my view. Plus, money will be rotated, and bonds could be a very good option for that. How to use it as confluence for a potential top? I'm not so sure if this is like something I would try to predict with the bond market. I just like, for example, if you I wanted to say if you remember, but I was not even born at this. I mean, I was born in this area. What I want to say is, if you study this whole move here, you will realize that everybody and their dog was like going into the stock market, investing because of the internet boom. Everybody was suddenly able to invest into stocks, and everybody, like also in Germany, like lots of companies went public and the stock market and blah blah blah. So lots of people are started to invest, and look at what happened next. And we could head for something like this, like a big sideways range. And in this case, the bond market might be attractive, especially because we have this change of character. But in general, I would not say, okay, I look at this and I see a double top here, and this means that for the stock market. This is not how I would read this whole thing. Yeah, I hope that answers it. I mean, there might be more to it. I'm not saying you can't like find the stock market top based on bonds, but I haven't found anything when I did my research here, and I kept it a very high time frame, because look at in here, like this is the 90s, right? And here's 00. And yeah, we had a rising bond market into that, and like, I mean, this whole area was still like sustainable bond prices, and then it started collapsing and collapsing and collapsing, simply because with the economic crisis, they needed to print cheap money. They needed to like support the economy, print more money, because otherwise it would have broken down. And then we had this period now of this huge parabola, and yeah, the first time since 1980s that we started making high. And this is important in my view. This is really important. And I mean, yeah, also 5% return. is more attractive than 0%. But then also, you see there are so many variables. If you think about that, about the money flow, they also printed trillions like in the last 5 years alone. And like you remember the 2022 bear market when everybody said, where should the liquidity come from? Where should the liquidity come from? Why? How can prices rise? There is no liquidity. Nobody, the Fed is not printing money. Yeah, but bro, or bro, there were trillions have been printed in 2021. This money is still in the system. It will trickle down into everything, and it's not just like burning away and like or leaving the system suddenly. It will always be rotating. Exactly, and everything you learn adds something to the whole puzzle. Every move you take, every experience you make will shape your strategy. And this is exactly how you should see it. People are hopping strategies, or people are changing and chasing strategies because they think they will be the holy grail that suddenly makes everything easy. First of all, this doesn't exist. Second of all, they don't realize that if they want to be successful, they need to make it their own. They think they can just like take it from somebody else who is super successful, but you will never think like this person. It doesn't work that way. It just doesn't work that way. And so yeah, that's great stuff. Super great stuff. And this was also for me. In the beginning, I found a few good traders, also Money Tower and Lucky. I studied everything they wrote, but I also started learning about concepts that had nothing to do with them. And maybe I got a hint from somebody, or also Money Tower said, look into Wyckoff. I studied Wyckoff from somebody else, and I never integrated it into my system, but I understood what it means, like how price is designed to create liquidity, and all of those things. It's like the more the more you're able to integrate, the more you're able to learn and apply to your own knowledge, the better. I also, for example, I figured when I open my BitGet app and I see my positions, there's a little chart, and it has these MA lines on it. And now every time I check my positions, I have a look at this chart and I look at these moving averages. And I'm not using them, but I look at those and I think about how would this affect somebody who's trading with them. And I know there are different lengths, and you say, okay, once it's below, it's continuing this trend until it breaks above, and then you have the long lengths. So I know the basics about those things, but I never use them. And now I just look at them and I think about how this will create liquidity, where is edge in that and where is not. And in the end, maybe at some point I decide to like just apply one to my chart and make something of it. It's once you have like a certain amount of knowledge and understand the buying and selling kind of thing, like how liquidity is created, all of those things, suddenly you can apply everything. You can use trend lines, you can use channels, you can use ranges, you can use everything, because everything comes down to the same thing, buying and selling. And you will see how people see the market, how they act, and how they get tricked. And so every strategy makes sense pretty much. You can apply every strategy to your own by simply using them as counter trading them, or knowing when, for example, this certain strategy has edge and applying it then. So for example, I also traded for a few weeks, I traded a breakout strategy pretty much. He called it a momentum strategy, but I traded it and I had like super big results with that. I mean, I doubled my account in just a few days. But I never really applied it anymore, because you have to be around the opening and stuff like that, and it's all sorts of things, scalping stuff, and I just wanted to live my life. But it worked super well. And for example, if I now do something on lower time frames and take a scalp, I have this knowledge of how those momentum trades work, And I can, even though I don't maybe not even take a trade based on that, I see how price develops exactly like that, and I already know that my position will work from this point on. And so again, I know this, but I don't really use it. I don't really trade based on that, but it's helpful. I had a mentee who is into cycles, and he is into Gahn and Hurst. And remind me, Hurst was the one measuring from low to low, right? Yes. I also think the Hurst stuff is what Camel Finance uses. I watched him a lot in my earlier stages because I liked him and I found cycles interesting. And he's also like measuring from low to low. I'm not sure if it's really Hurst, but it's there's also definitely something an edge to those cycles. But what I've seen with cycles, it's often very easy to apply a bias to them. So when I saw my mentee measuring those cycles, it was always like, uh, let's take a blank chart maybe, or going back. It's like he used the cycle tool. Where is it actually? I've never used it. Cycle. Yeah. And then he's measuring like from this low to, let's say, this. This is like, there it even starts already. It's like, to which low do you measure? And then you can apply it like, and he was always like trying to to fit it more or less. He's like, yeah, and here it doesn't fit so good, but here it fits super good. So this is actually, look, and here it also fits good. It's not perfect, but it fits good. And then here it's also, yeah, see, here's a low. I'm I'm exaggerating, I think that's the word, a little bit, but you know what I mean. It's super easy to apply bias instead of a rational like analysis, and I think that that's the biggest danger. I think there is something to cycles, and I've seen also like also for example Camel Finance trading super good with cycles and being super profitable on the way up. Like I've only seen him like very profitable on the way up. I know he was very bullish BTC at 125k based on his cycles. And yeah, every idea, every strategy can fail. It failed, and but this made him also like paying back a lot. And then I also have seen like, for example, people in the earlier stages applying cycles in a very like biased way. So yeah, I think there's something to it, but it's easier to get biased than with other PA strategies, because like a PA strategy, do you have price there? There's demand, obviously. Obviously, you can also pick like this is demand and this and this and this and this, but I think it's harder to bias the analysis there. And then there's also with the Gann stuff, but the Gann stuff becomes a bit weird. I've seen, um, yeah, it's like squaring out price and stuff, and it's like, it was a little bit of hocus pocus to me. Like price rejected at 125k, so you measure 125 days to the next low, then, and yeah, so this was all a bit. And then he talked about doing a Gann mentorship, and it's super expensive, and you have to sign an NDA and stuff. So this was all a bit fishy to me. And but in this case, he said like it's 126 or 25, 26. So you measure 125, 26 days. And actually in this case, it's not that bad. He said you measure, and before price obviously hits that, you know that around the 8th of February something important happens. But in this case, the only thing that really happened like is that we hit this low here, we bounced 20%, and then you bought, if you bought up here, then price went down again. And every strategy is oftentimes, or many strategies sound super nice on paper, but how are they like really tradable in reality? That's oftentimes a complete difference. And should we go up here? I would say it's not that off, to be honest. but this is pretty much the only example he could show me that then would make sense. And I've not seen anything else so far that would make sense, because from this point, for example, you could also say it's like you should measure 74 days then, which brings us to this point, which is then a major inflection point in the market, but it was before this drop. Yeah, and then we went higher, but is it really tradable? I don't know. Not for me, probably. Yeah, and this is the point. Like, it seems so nice on paper that you think you can suddenly predict super easy, like into the future. But I think, yeah, bias is a big one. And then, is it really tradable? Is it like actionable, tradable advice? And sometimes I have like heard from strategies that I would not say I would not be able to structure a proper trade around this, but only based on that. Maybe taking it as confluence, whatever makes probably sense, but only this hard thing. And yeah, I said I've seen very weird strategies from people showing me, and then like from somebody on X, like it's taking 7 8 different indicators into account, and then you just go long, and this indicator flashed some magical block in this area, and it said like price needs to go back to this 140K level, and obviously it never did. And he then said, yeah, it's nice if it goes further down because you can then buy more, because then your position gets bigger and price needs to go back there. And yeah, if you like, I think he showed me like here that it flashed and he said you can go long, you're then now down 40%. And yeah, sure, if you buy all the way down here and the average is probably somewhere here, you're still in the big drawdown. You never know if prices will. Yeah, okay, the block says price is coming back. It's a magical block, so it needs to come back. Yeah, what the fuck? To me, this is like, it's like a street scam. It sounds like a street scam even to me. Like, you tell me in which hand I hold the magical cube, and then you win 20 bucks or whatever. So this is what it sounds like to me. It's not rational. It doesn't make any sense. And so there are obviously also weird strategies which I never integrate into anything because it just doesn't make sense to me. But as said, to the cycle thing could be something. Not looked into it enough, probably. Mm. But let me know your findings, Mark. I would be interested, because I said I got input from my mentee there already. So if we could give me also some input on your experiences and how this is developing for you, would be nice. Because in the end, I think if we work together for long enough, I will even learn something from you. And maybe you will become a cycle expert and you tell me then how to predict with cycles. Why not? I'm super open for everything, and I'm glad if somebody else is giving me a new perspective on things. Yeah, I think Camel is doing this as well. Camel Finance. He also always talked about how gold and those gold miners are connected, and one thesis is pretty much supporting the other. Also based on his cycles and everything. Um, so yeah, as said, I think there is definitely something to, and especially like the timing factor in general. People neglect the whole timing so much. So they think like, oh, okay, PA, supply and demand and all that. But there's so much to timing on a psychological level, on a systemic level, like tax deadlines, real world events, psychology, mass psychology, all those things, seasons, all play into timing. And so why wouldn't cycles work? And yeah, extra confluence. So for example, if I would apply cycles, I would also add it on top of like of a PA strategy, because the chart can't lie. You see price action and it develops and it's printed and it can't not change. So it cannot change. And then adding cycles on top, which is a little more predictive, a little more like fluid, maybe even, um, can probably add super good confluence in the timing perspective, because so many people look at this at price, look at this at candles, but how many people really look at the time scale and the time dimension? Pretty much no one. And so yeah, very interested in your findings there. Good, guys. I'd say we wrap it up. Was a nice one. And we talk on Saturday. I wish you all a great week ahead. And stay safe. Have fun. Yeah, and by the way, I plan to publish either this or the next session, I'm not sure, for announcement purposes. And so your names will pop up here. I hope this is not a problem. Just want to be sure. Okay. All right, guys. Good to know. Have a good one. Bye.